Interested in trading options but don't know where to start? Looking to gain a basic understanding of call options? Want to know how you can make money buying and selling call options? This video is meant for options beginners. I will be breaking down the basics of the call option. I will be showing you how to make money from buying and selling call options and also the potential risks with each strategy. This might get slightly repetitive if you've been watching my previous beginner option videos where I keep redefining the same terms, but it has to be done. A call option is a contract that gives the buyer the right, but not the obligation, to buy 100 shares at a predetermined date and a predetermined price. As the buyer, you have to choose the strike price you want before you purchase, not after. Most options expire 4 p.m. on the day of expiration, which is usually Friday. Some options go till 4:15 p.m., so watch out for that. So you can exercise early if you want. When buying an option, the price you pay is called a premium. No matter what happens after, when you buy an option, the price you paid, this premium is gone forever. If you make money on the option, you still paid that premium. Or if you lose money on the option, or it expires and you didn't exercise it, you still paid that premium, it is gone forever. What happens and what you do with the option after you purchase it can vary, but the premium you paid is a sunk cost. On the flip side, when you sell a call option, you earn a premium. Someone paid you for that contract. No matter what happens after you sell that contract, you earn that premium, it's yours forever. Whether the call option is in the money or out of the money, you have that premium, it's yours. If you sold a contract to someone, a call option, and it expires worthless, you keep the premium. If you sold a contract, a call option to someone, and it's in the money, they can exercise it if they want, but they don't get their premium back. You still earned it, they still paid you for that contract. When looking at an options table and you're looking to buy a call option, you'll notice the price for the strike prices closest to the current price of the option are the most expensive. Let's take a look at Tesla for July 24th, 2020. Tesla is currently trading at $14.17 per share. Take a look at the last premium paid for each option after the current price. 14.20 strike sold for $59. Then the 14.25 strike sold for less, for $56.45, and so on. It continues to decrease. The closer you get to the current stock price, the more you'll pay in premium. This is because the probability of Tesla hitting 14.20 when the stock price is 14.17 is high. It's obviously going to hit 14.20 before it hits 14.25. So you're paying more for this call option to get a higher potential of income and a higher potential of success. So you have a choice to make. Do I pay more for a strike price closer to the current price? Do I think the stock will increase enough for me to make back that premium and still make money? I'm going to answer 3 questions I get on buying call options. How much money can I make by buying a call option? The short answer is infinite. There's no limit to how much you can make. There's no cap on how much you can make when you buy a call option. Your income depends on how much the stock increases. If you buy a call option for Tesla at $14.50 and it increases to $10,000, you've made all that difference. When buying a call option, the more the stock increases, the more you'll make. Let's take a look at a graph of Tesla. Tesla is currently trading at $14.15 per share. We buy an option for the $14.50 strike. It costs us $46.75 per share, or $4,675 to control 100 shares. You can see the higher the price goes, the more you'll make. The higher the price goes from $14.50, the more you'll make. How much money can I lose by buying a call option? While the upside is limitless when buying a call option, the downside is limited. Your max loss is the premium you paid to purchase the call option. If you paid $4,675 to purchase this Tesla call option, the worst case, the worst that can happen is it expires worthless and you lose that premium. You lose $4,675. Remember, you're under no obligation to exercise this call option. If it expires under your strike, then you let it expire worthless. You're under no obligation to exercise it. Taking another look at the same graph, you'll notice the graph has a bottom. The bottom line is your max loss. The loss, it is $4,675 up until the $14.50 strike, where it slowly increases. What is my break-even point? The break-even point is important. You'll need to calculate or estimate this beforehand. Do you think the stock will increase past this point for it to make the trade worthwhile? The break-even point is pretty easy to calculate. It's strike price plus premium. In our Tesla example, we paid $46.75 for the 1450 strike. That means our break-even point is $1,496.75. So we're guessing Tesla will increase past 1450. Even if we guess correctly, it increases to 1490, we're still losing money. We paid $46.75 for the premium. So we'll need to make at least $46.75 per share to break even. Just taking a look at the same graph, look at the break-even point. It's not at 1450. It's at 1496.75. I'm now going to answer 3 questions about selling call options. The same questions, you notice some of the answers are just the inverse of buying. How much money can I make by selling a call option? Your income, your gains are limited when it comes to selling a call option. When you sell a call option, the buyer pays you a premium. That premium you earn, that income, those are your max gains. You can't make any more than that. Let's take a look at the same graph to see how this looks. Tesla is currently at 1415. You sell a call option at 1450. You don't think Tesla will go past 1450, so you don't mind selling this option. Someone can force you to sell shares at 1450 if it goes above. You earned $46.75 in premium for selling that option. That's your max gain, your max income. You see the chart is flat at 4,675 all the way until the stock hits 1450. Then anything higher, you start to slowly lose money. How much money can I lose by selling call options? While your upside is limited, your downside when selling a call option is limitless. If you already own 100 shares of Tesla and you sell a call option, this is called a covered call. If you sell a Tesla call option at 1450 and Tesla increases to 1500, you're forced to sell at 1450. Although you're not losing money, you're missing out on that $50 gain per share. So I'm considering this a loss. Making this even worse, if you don't own the 100 shares and you sell a call option, this is called a naked call. This is when the losses are real. This is when your losses can be unlimited. The higher the stock price Tesla goes, the more you'll lose. Let's take a look at the same graph. Notice it says maximum risk infinite. The more it increases, the more you'll lose because you're forced to sell the shares that you don't have. If Tesla hits 10,000 per share, you have to buy the shares at 10,000 and sell them at 1450. This is massive losses. What is my break-even point? The break-even point is fairly easy to calculate. It's the same as buying a call option. It's premium plus strike price. In our Tesla example, we earned $46.75 in premium for a 1450 strike. That means our break-even point is $1,496.75. So we're guessing Tesla won't increase past 1450. But even if it does, if it increases to 1490, we're still making money. We earned $46.75 in premium. So the shares have to increase by at least $46.75 for us to start losing money. Just taking a look at the same graph, look at the break-even point. It's at $1496.75. That's all I'm going to talk about for this beginner call options video. I'm obviously going to make a more intermediate video and then a more advanced call option strategy video. The next video for now obviously is going to be put options. I'll be discussing the same things, buying and selling put options. I might take a break in between all these call option videos to do a few dividend stocks that I think you should buy. With all the earnings, the Q2 and Q3 earnings coming out, I think it would be a good time just to analyze a few stocks and recommend a few dividend stocks that I think Canadians and US subscribers or investors should invest in. Make sure to tune into my unscripted live options trading videos. I'm basically making 1 or 2 videos a week. I show everyone my live trades. I think it's nice to follow along with someone actually showing you how they make decent income off of options. Thanks, guys.